center business are 56,000 and 14,000 respectively. All items of income and donations, if any, allocated from Windsor Gardens as well as those stated above must be accounted for in your answer. Please show the net taxable income from the respective sources clearly. So we need to ensure that the components that have been asked in each of the parts are satisfactorily addressed in order to earn the maximum marks allowed under each question. For the first one, we have to show computation of adjusted and divisible profits along with the capital allowances for Windsor Gardens at the general partnership level. For the second part, you are required to compute statutory income of the company, Blossoms Private Limited, taking into account the additional information and all the information that you have been provided with and derived in the first part. Now, let's move on and look at the suggested approach. So similar to the earlier question, we will first work on computing the adjusted and divisible profit of the partnership Windsor Gardens for year of assessment 2021 with the basis period from Feb 1st, 2019 to Jan 31st, 2020. The net profit for the year as set out in the question is 21,000, less of other streams of income, basically interest income of 24,000, as well as the other income of COE rebate of 15,000, pushing it to a net loss of 18,000. Thereafter, we assess what is in the expenses segment and come up with the following adjustment. Loss from the sale of equipment, 500. Candace entertainment expenses, you will note that the amount itself should relate to the component that the Candace actually did not incur for business. Next, approved horticultural trade fair, 7,800. Candace salary, which is 105,000. For family member salary, the amount is 6,000. You will recall from the expenses segment that Candace's husband is also the office manager and is being paid 72,000. The 6,000 here is the excess that the husband gets from the market rate of 66,000 and attributable to Candace as her drawing as a partner. Depreciation of 25,000, interest paid to partner of 9,500, and contribution to Blossoms 150,000. This 150,000 should be familiar as the contribution to welfare fund of Blossoms employees as mandated under the partnership agreement. After the adding back 297,200, our adjusted profit is 279,200. This is where we will less off all the partners' appropriation. So in this segment, as a reminder, we'll be deducting Candace's salary, Candace's entertainment expenses, Candace's interest paid to partners, contribution to Blossoms, etc. As you can see, the total amount of adjustment is 273,500. These give us a divisible profit of 5,700. Not very profitable partnership, if you ask me. Moving on, candidates should remember that they are also required to compute the capital allowance for YA 2021. So there are two purchases we should be aware of. In fact, two gardening equipment, set 1 and set 2, both of the same cost. Let's look at set 2, which we designate as the set that replaced the earlier equipment. So for the earlier equipment, it was informed to us by the question that it has been fully depreciated. Therefore, the tax written down value of the equipment is 0, less sales proceed of 1,008. This gives us a balancing charge of 1,008. As Section 21 was enacted, instead of computing capital allowance on the total cost of the equipment and having a balancing charge hit its tax computation, the cost or the qualifying cost of the assets would be the total cost less of the balancing charge, leading to amount of 3,450. Under the accelerated capital allowance regime, the qualifying capital allowance should be 75% of this amount, giving us 2,588. The capital allowance computation for the other set of the gardening equipment is pretty straightforward, which would be 75% of 5,250, giving us 3,938. For the van itself, we also assume that it qualifies for 75%. Therefore, it's 105,000 times 75%, giving us 78,750. The total capital allowance for YA 2021 is computed to be 85,276. Again, please remember the requirement of this question. Candidates do not need to go beyond to get the full marks. For example, there is no need to allocate the divisible profit or the capital allowance at this juncture. Clear? Now, with that, we'll move on to cover the second component, which is slightly more challenging. Let us recap the question to regain understanding on what is required of us by this question. Here, the question requires us to compute the statutory income of Blossoms Private Limited for YA 2021, taking into consideration the following information. Blossom's adjusted profits and capital allowances for YA 2021 from its garden center business are 56,000 and 14,000 respectively. All items of income and donations, if any, allocated from Windsor Gardens, as well as those stated above, must be accounted for in your answer. Please show the net taxable income from the respective sources clearly, for a total of 4 marks. Hence, in this case, you will need to understand and be able to compute the statutory income of a company, Blossoms Private Limited. Here, we have to make it clear in terms of its different income stream, as the questions make a specific call out that you will need to show the net taxable income from respective sources clearly. So we will take care of the first one, which is garden center business. So the garden center business of Blossoms Private Limited is not connected with the partnership, and it's under its own business ran by the company. Here, we were given that the adjusted profit was 56,000 and a capital allowance of 14,000 was available for the year. This gives us a net amount of 42,000. Next, we consider the income from the partnership. First, we have to calculate the divisible profit. Note that the amount you see here is 2,850 instead of the $5,700 that we computed in the earlier question. Now, it is critical that you remember that the amount we calculated earlier of 5,700 is the total divisible profit of the partnership, not of each partners. As the agreed profit sharing ratio is 50-50, we divide the amount by 2. Therefore, the amount that is attributable to Blossoms Private Limited should be 2,850. From divisible profit, we add on the interest on capital that it received from the general partnership, as well as the 150,000, which is the mandated contribution to Blossom Private Limited's staff welfare fund, bringing the adjusted profit to 160,850. Next, we will also less the attributable capital allowances against this income stream. Take the note that, again, the amount that Windsor Gardens should be giving to Blossoms Private Limited is 42,638. You, again, should notice that this amount is half of what we computed earlier of 85,276. This is because the capital allowance is also shared between the partners using the same agreed profit sharing ratio. Most candidates who were able to address the questions should not have a problem, but some do made a careless mistake here by not applying the profit sharing ratio, therefore losing some precious marks. Moving on, the net trade income that we would have is 160,212. If you remember, to get statutory income, you need to also add income from non-10(1)(a) sources. And in this case, the interest from UOB Bank is 12,000. Again, why 12,000? As the total 24,000 income is derived by the partnership, for which Blossoms Private Limited's share is 12,000. You may also remember that Blossoms Private Limited is a corporation and not an individual. Therefore, interest income from bank will be considered taxable income, therefore included in the computation of statutory income of a company. This should bring us to a total amount of 172,212. In total, we have covered all the components required to get 4 marks under this question. Most candidates at this point will be wondering if this is considered a general partnership taxation question. I would say yes, even though this is considered a hybrid, as it required candidates to possess knowledge of the taxation of company and computation of a company's statutory income. It would still be considered a question that tests the candidate's knowledge in the area of taxation of general partnership, as it shows the close interaction and demonstrate the concept when we talk about how a general partnership itself is not a taxable entity and taxes imposed at the partner's level, which would mean that the taxable profit will feed into the respective tax computation and return of the partners. This is one of the examples that the questions during the exam could turn out. With that, we have now come towards the end of the webinar. I hope that my sharing today on the concept of the general taxation of partnership would have provided you insight on how to do your revision, understand the key concept and calculation that is required, as well as some practical guidance to your upcoming exam. Remember, these questions are fitted with suggested answers. If in doubt, please consult your lecturers or check with the Inland Revenue website or any other reference materials should you believe that the format that you are presenting your answers would also suffice. The most important thing to ensure that you will be getting the mark you deserve during the examination will be ensuring that the answers to the questions are provided in a clear manner with explanation to how you derive the amount.